I think we both agree there will be this hyperbolic scenario, but the powers that be with the largest armies, the biggest balance sheet, and all the political power, they will fight. They will fight till the death. That's the big battle we're seeing at the moment. The big battle is between math and thermodynamic certainty, Bitcoin, if you will, the best money ever, theoretically and mathematically, and the powers that be, right, that want to protect what they have, because they're going to lose it all, right, or a lot of it. Yeah, it's a political power game with the most powerful countries and armies in the world and central banks against a mathematical, physical, thermodynamical, optimal solution. So yeah, I don't know who wins, but it sounds like the church at the time saying the earth was flat and some weird mathematician saying the earth is round. And in the end, of course, the optimal solution wins. The truth wins, but can be a lot of war and nasty time. Fully agree. Real estate is not fungible and it's not portable either. On all those dimensions, Bitcoin is the better money. On the other hand, the only thing where we differ, I guess, is the timing of the events. So yes, the dollar will die. I mean, every reserve currency dies, right? It's a certainty. So there will be something new, something better. But when is that happening? It's the same question as the super cycle. Are we entering the super cycle now or later? I think the super cycle will be there. It's inevitable, but not now. I think it will happen after next halving, if you will, after the stock to flow of Bitcoins will be higher than gold and higher than real estate. Because until that point of a stock to flow of 100, real estate will, for whatever reason, be the preferred asset, as we're seeing right now. I'm seeing around me, people put more money in real estate, like hundreds of millions. BlackRock, for example, is buying the entire city of Amsterdam because those companies and the money right now is with old people. The real estate and the gold, the physical world, and not the digital world. The digital scarcity is a next generation thing. So I think it will happen. But I also see in my own model that there is a linear relationship between scarcity and value. And I agree that is one of the dimensions of money. Fungibility is the other one. Portability is another one. Divisibility is another one. That's also very problematic with houses, divisibility. But scarcity is in my view, the most important factor, causing that linear relationship and causing people to put more money in real estate now. That will change once next to divisibility, fungibility, portability, also the scarcity of Bitcoin will be better than real estate. So my guess would be, we're probably going into that question right now, but so are we going into this FOMO hyperbolic scenario right now or next year or the year after? Or are we going to drop 80% first, have a big war with the powers that be, the central banks, the US dollar, et cetera, and go into that hyperbolic scenario or a US dollar scenario, if you will, where Bitcoin is the best store of value after the next halving? So say 2024, 28, that would be the period, or maybe a little bit after that. Let's say somewhere between 2024 and 2032, I think we both agree there will be this hyperbolic scenario. Bitcoin will be by far the best asset, physically, dynamically, mathematically, above all other. But the powers that be with the largest armies, the biggest balance sheets, and all the political power, they will fight. They will fight till the death. Adam Back had a very nice tweet about that. Not the tweet about that stock to FOMO model, but the one earlier about where he compared it with the Asimov trilogy, the Foundation trilogy written by Asimov. Fantastic story, fantastic, must read books. And yes, you could say the stock to flow will be killed by when the dollar falls. You could also say that the stock to flow model is actually predicting the fall of the US dollar. And it gives a time frame as well for that. Because the stock to flow model uses the Bitcoin price denominated in dollars. So as we all do, right? I mean, the Bitcoin price is in dollars.
But it's also making an assumption that you won't have contagion of fear on the dollar or whatever fiat currency, right?
I think that's a little different. I think it's not making that assumption explicitly, of course, maybe implicitly, but I think it's like this. And that's why I like the stock to flow X model more than the stock to flow model. If we look at the stores of value that in this weird macroeconomic environment we're living in right now with negative interest rates and quantitative easing going through the roof, if we look at that, the stores of value that are available, then real estate is the biggest one. it's about 100 trillion US dollars. Globally, its stock to flow is about 100, and it's the number one store of value that people around me at least use as a store to put their value in. They just buy extra houses and rent them or Airbnb them or whatever. So that's number one. The second store of value, of course, is gold with the stock to flow of 60 and a value of 10 trillion US dollars. There's, of course, equities and bonds all in the 100 trillion range. But if we look at the stock to flow X model for Bitcoin is 55 now, stock to flow ratio, and the value is around the 1 trillion. So it's much smaller than real estate. It's much smaller than gold still. But the good thing about that stock to flow X model is that we do not have to extrapolate, like all the other models, extrapolate into the future that we do not know. The stock to flow X model is stock to flow ratio on the X-axis and value on the Y-axis. There's no time element. It's not a time series. It's just gold, real estate, Bitcoin, silver, and diamonds. And we can interpolate that model. We know what a stock to flow 100 asset is valued at. It's the real estate market. We know what a 60 stock to flow ratio value asset is valued at. That's $10 trillion. That's gold. So I think that hyper Bitcoinization scenario that we were talking about, breaking the model, is after that stock to flow 100 ratio. So in my point of view, the dollar will die, the empire will crumble after stock to flow 100 for Bitcoin. That's sort of where it all goes wrong. And where, well, the model fails, but maybe the denominator of all valuable things fails. We have to replace the dollar by, I don't know, gold, Bitcoin maybe, or something else. Maybe there's a new world reserve currency at that time.